Hi, Paul Gerard from Price Accounting Services. In this video in our SMSF channel, we're going to be discussing insurances in an SMSF. And really there are two sorts of insurance you can have in an SMSF, and we'll talk about the two broad differences and the issues surrounding them. So the first one is member life insurance, TPD, and income insurance. And the first thing I'll say is that owning a policy in a self-managed super fund will always cost more than, say, an industry fund. So that's a key consideration sometimes because you don't get access to group pricing, but you certainly can get insurances, right? And specialised insurers should be consulted for those sorts of personal insurances, and we've got access to them, for example, through Price Financial Intelligence, one of our own companies, which has an AFSL, and licensed financial advice can be given on those products. Those sorts of insurances, it's very important that the fund trustee is named on the policy, and then in the annual accounting for the fund, we actually note the insurance benefits as part of the member's death benefit potential in the member's statement, and it's all above board, and the fund even gets tax deductions for the relevant premiums. Mind you, 15 cents on the dollar, and it can be a very effective matter. Care has to be taken with some insurances, such as income insurances, where a fund may well be entitled to receive insurance proceeds on a relevant claim, i.e. the member injures themselves, ACL injury, can't work for a year. The member might not, however, achieve a condition of release. A condition of release requires that to come out of super. So sometimes our financial advisors will suggest dual layered policies where it might be income protection outside the fund and then other insurances such as life insurance within the fund. Okay. The other form of insurance concerns assets, property of the fund. And I guess a good example of that will be things like rental properties. So you want to have the property insured from total loss and destruction. It's probably a condition of a loan, as well as even if it's owned outright by the fund. Because if the property burns down, you don't want a loss. So an auditor might make inquiries of the insurance status and would expect that the trustee of the fund is named on the policy, so that, for example, I'm going to use the example of Mary and David Smith are trustees for their fund. Okay, Mary and David Smith are individuals. So is the fund the owner of the policy, or are they personally the owners of the policy? So it would be necessary for the insurance policy to indicate that the SMSF, for example, the Smith Family Super Fund, ABN 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 9, is the insured. That way it's very clear that the SMSF owns the policy, so in the event of a total loss, the insurer doesn't write out a check to mum and dad and give them the money, it gives it to the fund. Okay? And they're the key issues with insurance. The other one, of course, with property might be landlord insurance and the likes. So just make sure the trustee is named. We also need the documents when it gets around time to audit, just because the auditor will want to check the ownership of policies. So yeah, I hope that guides your knowledge on insurance in self-managed super funds. So we look forward to seeing you in another video in this channel, and until then, see you. Bye.